All right, Marco Papik is joining us now. He's partner and chief strategist at Clock Tower Group. Marco, great to have you with us here on the program. Thank you very much. You are a macro investor, Marco, and I know that you've sort of taken note of what the turmoil we've seen in Indian markets because of the troubles at one of the big business conglomerates, the Adani Group here. How has the view on what's happened evolved from an overseas perspective, Marco? Because this is still an ongoing situation here. Go on.
Yeah, so, it's interesting. First of all, thank you so much for having me on your show. It's very interesting because in the West, and in the US in particular, this has been covered really in great detail, focusing on the report by the Hindenburg research firm and the Adani Group. So there has been a plethora of focus on the specifics, which I think is interesting because you would think that people in the West would take a more broader macro perspective on India itself and not obsessed about an individual group, no matter how, of course, important it is to the economy. Why? Well, because allocation decisions by large institutional investors in the West and in Asia and the Middle East, we're talking about CIOs that manage hundreds of billions of dollars. They're not really focused on an individual stock. And what's really happening is not a crisis of the Adani Group. What's really happening is that China decided in October of 2022 to resolve a lot of uncertainties about its governance, its foreign policy, and the direction of its economy. So following the October Congress in China, you basically had a commitment by policymakers there to focus on growth, on ending the TMT sector, the IT sector crackdown, which began in 2021 and helped Indian stocks immensely in that year, to end some of their political and geopolitical assertiveness, which also helped Indian stocks in 2022. And so that pivot in Chinese policy has awoken appetite for China allocation by many institutional investors. And that creates a very pernicious context for India, a context in which something like the Adani Group crisis then becomes really just a spark that forces many CIOs to shift allocation away from India and towards China.
Okay, that's interesting. So you're saying that because of what's happening with the Adani Group, perhaps there would be a little bit of a sentiment overhang and money could move out of India and into markets like China, which in any case has been the narrative even before this crisis, right? But I'm just trying to play the devil's advocate here. Not all global banks are pessimistic on the Adani situation. I'm just quoting two notes, one from Goldman Sachs that told investors on a call that Adani debt had actually bottomed out in the short term and that the bonds of Adani Port and the SEZ have now become interesting at the current price. So that's one. And on the other hand, JP Morgan put out a note where they said that there is eventual asset value on the regulated ring-fenced assets of Adani and they have a preference for the bonds issued. So there is the other side as well that believes that at some point there will be value in this group. How would you react to that?
Well, first of all, I have no idea. I'm not a bottom-up investor. Like literally, I know nothing about individual stocks. I cannot speak to anything, and I don't care. A macro investor focuses on a top-down perspective. And so, you're going to have babies thrown out with the bathwater, which is probably what's happening to the Adani Group at this point. And, if you step back and really think about Indian performance since 2020, since the pandemic, Indian equities are the best performing market in the world, even better than the US. And there's really two things that helped India over the course of the last 3 years. One is that the IT sector does have the second largest weighting in the index, and obviously tech stocks did extremely well in 2020, 2021 across the world. And the second issue is that if you were an EM allocator, if you needed to allocate to emerging markets in 2020, 21, 2022, what you saw in China was really scary. And so what you did is you hid in India. You basically took your allocation out of China and you opted in India. And I think that that's now reversing. So I think those notes are probably correct. There probably is a value in the Adani Group. But as a macro investor, I'm just saying, I think that these headwinds to Indian equities are going to persist for some time. And so it's very difficult to start bottom fishing Indian assets at this particular juncture, especially as commodity prices start going up and as the negative relationship between Indian assets and commodities reestablishes itself this year.
Hi, Marco. Good morning. Marco, but, how much of that shift from China to China from India it has happened because the Chinese markets are up 45%, right? They're not as cheap as what they were, say, in October end or November beginning. And the Indian markets have not really done much. And besides these two, what about the Taiwanese index? I was just reading a couple of reports on the MSCI emerging market. Now, Taiwan has pipped India post this recent underperformance that we've seen to second place. So your take on how much of this has already played out, the shift to China and any other markets you're tracking?
Yeah, so I think it's hard to time that. India still remains, in terms of various valuation metrics, the most expensive market in the emerging markets. So again, you got to put a hat on of a foreign asset allocator sitting on hundreds of billions of dollars. They have an EM book, and they're looking at what's going on around the world. India's expensive. They're moving out of India. And this Adani group is just noise, but it's pernicious noise. It's negative noise. So I would say that there is still a lot of room for this to go, especially because China's been underperforming for about 18 months. And, you had this interesting year in 2021 when Indian stocks were on fire, but commodities were also on fire, which was a very strange macro event. Indian stocks looked through that. They looked through all sorts of other things in 2022. So you had multiple years of outperformance. This is a little bit of a hangover from that. In terms of what other emerging markets would I be excited about? Anything that has to do with commodities. So Latin America is very interesting, and I think is going to do very well. Indonesia's been on fire recently as well. I also think that Saudi Arabia, although it's probably due for some indigestion, should do well as well if our oil call is correct. And we do expect oil prices to bottom and start moving higher over the course of the year.
Okay. Marco, just one last from me. You're a macro investor, and I think this is right up your alley. For India, one of the big concerns has been the fact that maybe the globe, when we began this year, or maybe even late last year, that the globe is slowing down very fast, or will slow down very fast in 23. But as the jobs data in the US shows, maybe it's not, right? So maybe we will get away with much lower inflation, but not much weaker growth in the US. And then you described what's happening in China. I mean, is the global environment really going to be so bad for assets like equities? What's your sense?
No, actually, I haven't been bearish. I've been writing for 6 months. I have no idea why everybody thinks the recession is coming. But let's put this into the Indian perspective. I'm not sure it's a good thing that everything is fine for India. India, for me, is like an anti-growth market. You hide in India. Why? Why do you hide in India as a foreign allocator? Because India has a huge domestic market. Trade is not a big portion of its GDP. So India should do okay in periods of low growth globally. Commodity prices fall. That obviously helps India. Consumers in India are the main driver of the economy. And so that's why the fact that everything is going to be okay this year, maybe even extremely well, that's not necessarily a good thing for Indian stocks. Foreign allocators are going to start looking, and they're going to say, well, if there's growth in the world, I should be in commodity-linked emerging markets. I should be in China, which has been doing terribly for 2 years. I shouldn't be in India. And that's what I think is a problem right now. I mean, it's very challenging if you're sitting and you're thinking about allocating to India at this point. If the recession narrative truly is wrong, and if we're going to be fine, I'm not sure that India is going to outperform the other emerging markets. And that's going to continue this hangover, and it's going to continue to appeal to foreign allocators to move out of India, which is just going to pile on negative sentiment at a very bad time. But I think you're right. I think there's obviously going to be many, many interesting stocks in Indian markets that are just going to get hurt right now over the next couple of months for no good reason. And I think those are going to be gems for the rest of this decade.
So, I mean, there is no argument to be made that India could decouple from this whole Adani Group crisis purely because, we have a couple of good things going as well. I mean, growth is picking up, inflation is under control, a lot of the COVID-related issues are behind us, consumption has picked up in a big way, capex is coming back. Don't you think all of that could negate the overhang that this Adani crisis is having on the Indian markets?
I would put it the other way. I think the Adani crisis is a part and parcel of the overall macro story. So in other words, I don't think that it's the Adani Group. The Adani Group is just sort of like a needle that pops the balloon. I apologize for the pun. We in America are obsessed about balloons at this moment. But I think that that's sort of something to keep in mind. So I think that it's going to be very difficult to overcome the negative sentiment and the overhang. And just, again, remember, India's done extremely well for 3 years. If it has 6 months of underperformance, that's kind of what happens in macro markets.
All right, Marco, great to have you with us here. I have to tell you that we've overcome many other crises sort of before, when we've had large business conglomerates go under. And of course, that is not the situation here, but markets move on, I mean, as you would also agree. But point taken, maybe some time correction may not be entirely a bad thing after the huge outperformance. Thank you very much for joining us, and hope to have you back soon again with your thoughts
Absolutely.
and your
Thank you.
perspective. All right. Thank you. We'll take a very quick break here. Our list of top stocks to watch lined up next. We're back in just a bit.